I made more than £6,800 in one single day from investing. That's why I'm wearing something so cheery today. This is my best day ever for the past 20 years that I've been investing in. So this result is not representative of my usual result, but I just want to share good news with you and hopefully encourage you to start thinking about buying and selling shares and investing in the share market. I'll talk a little bit more about how I made money in this particular shares, but please bear in mind that investing is risky. And a large part of investing is actually how you manage your emotions when you're not making money, which this particular shares perfectly illustrate how I've learned my lessons over the past 20 years of investing. So just let me sit down because I'm getting a little bit too excited. The particular share that I bought is a company called Australian Strategic Material and it's listed in the Australian Stock Exchange. And I could buy it using my SIP account. This is part of my Trump trade. And if you never heard of the term Trump trade, it basically means any traders who try to make money using the Trump tariff. You may or may not have heard in April 2025, Trump decided to impose punitive tariff on a lot of countries, specifically China. UK and Europe were not spared either. Mexico and Canada were on the receiving end of the Trump trade as well. So what happened as a result of the Trump trade was China decided to retaliate by imposing their own trade restrictions on a lot of critical materials. And one of the critical materials is rare earth. Rare earth is actually not that rare. There's a lot of coverage about rare earth. Let me just summarize what exactly are rare earth and what exactly is this big deal all about. So rare earth is a group of 17 elements. You might remember your periodic table from high school. I can't remember the exact name, but it will have really complicated names like dysprosium, neodymium, or these are the two that I remember. But basically, they are used in everything from mobile phone to fighter jets to MRI machine. So they have very critical defense purpose. As you can imagine, if China imposed trade restriction on rare earth, then you can't even manufacture a fighter jet, which has a serious security problem for countries in Europe and countries like UK. Why does China have stronghold of rare earth? So the thing about rare earth is it's actually not that rare. So a lot of different places have rare earth. The problem is not with mining rare earth, but with processing rare earth. Some countries have more supply of rare earth and some countries have less. The countries that have more supply of rare earth would include places such as Burma, Australia. I think Canada has quite a fair share of rare earth as well. I need to double check on my notes, but I know Australia is one of the largest producers of rare earth in the world. The problem with rare earth is mining it and specifically processing it is very polluting. Because of ESG requirement, a lot of countries don't want to refine rare earth or process rare earth, or it's too expensive for these countries to process rare earth. So because of that, over the past 20 years, China pretty much got the largest market share of processing rare earth in the world. Doesn't matter where the rare earth is mined, more than 95% of the rare earth in the world are processed in China. So that's like a critical supply chain that China has control of. Because China has an advantage in processing it, they also have an advantage in manufacturing it. One key usage for rare earth is very strong magnet. So you can imagine even things like your iPhone earbud, for example, it can't function without rare earth. A fighter jet, of course, it cannot function without rare earth. So magnet is present almost everywhere around us, but there is so minute scale that very often we don't pay attention to them. You need rare earth in your fridge. You need rare earth in your EV. Like I just mentioned, you need rare earth in your iPhone earbud or even your mobile phone. And the whole world literally panicked because if you don't have rare earth from China, the whole manufacturing industry just stopped. So that was when a lot of the companies, a lot of the manufacturing companies in the world started thinking about, okay, where else can we source rare earth? And the stock of Australian rare earth companies just shot up. And I think there are like a big four. So the one that I bought is Australian Strategic Material. Linas is one of the big one as well. And then Arafura. And I think there are a few. I think there's one called Brazilian Metal. So for me, I was very interested in Australian Strategic Material because not only that they mine, they also have a processing plant in Korea and they are building a processing plant in the US, which is very close to where the key market is. So I bought it and within a few days of buying it, it shot up like 100%. But I only had a very small amount at that time. I only bought a few £100 of that shares because I wasn't quite sure about that shares yet. When it went up more than 100% to 2 Aussie dollar, which is about a pound, I sold some because I thought this is a very good opportunity to take profit. So in trading term, when we say take profit, it just means, for example, you bought something for 50p and then it went up to a pound and you decided to sell, you're taking profit of 50p. It's just a trading methodology. It's not a good or bad thing. Sometimes taking profit can be good, but some other times taking profit means you might lose out on further gain. Let's just use the example of 50p. Let's say the shares you bought for 50p went up to a pound, but you sold it and later on it went up to £1.50, you lose out on the 50p of additional profit. So taking profit can be a bad thing in that scenario. But if subsequently the shares went down to 30p, then taking profit is a very smart thing to do, which is why trading is a bit of an art and it has its own risk involved. But anyway, back to my example of Australian strategic material. So it went up to £2, to 2 Aussie dollar, and then I sold some. And then it kept dropping very rapidly. And I think I bought more at about $1.60. This is Aussie dollar. And it kept going down and I kept averaging down. In trading term, averaging down just means when the shares keeps dropping, you keep buying it so that your average cost of the shares keeps going down. This is considered quite a risky strategy, and you really need to understand the fundamentals of the shares before you can confidently average down. And even for me, I wasn't sure whether I was doing the right thing. Well, I mean, I was reasonably sure that the fair value of the company is more like definitely more than £1 Aussie. So when it dropped more than it dropped below £1 Aussie, I bought quite a large chunk of it, to the point where I was feeling a little bit uncomfortable because a large part of my SIP account was tied up in this one single share. If the company failed, I stand to lose about £10,000. But I was reasonably confident that given the circumstances, given the Trump trade, given the geopolitics tension, that share would do okay. It wouldn't bankrupt. That's my worst case scenario, a share that goes bankrupt. But I wasn't sure how long it would take for the share price to recover. By the time I decided that I've hit my limit, my average cost for the shares, because I was buying the shares at different price point and different quantity. So by the time I decided to stop, because I've hit my limit already, my average cost was about $1.19 Aussie cents. The share price continued to go down to 57 Aussie cents, and which means when it was at 57 Aussie cents, I was sitting on a paper loss of more than £5,000. But I wasn't that worried. In fact, I was thinking, do I want to even up my limit to pump in more money for this particular shares and buy at 57 cents, Aussie cents? But I decided, okay, a limit is a limit. So I'm going to stop. I'm going to be disciplined. And I thought, okay, I'm just going to sit on it because I'm very, very sure the price will be more than $1.20 Aussie dollar at some point. I just wasn't sure whether is it going to be a few months or a few years, but I was happy to wait. And then the share price had been going up since it hit the low of 57 cents in November. And then in December, it just kept going up to the point where it was about 75 Aussie cents. And I thought, okay, well, then there's a decision. Do I want to de-risk some of it, like sell some of it and take a bit of money back so that a smaller portion of my portfolio is tied up in this one single shares? I decided, you know what, it doesn't make sense because, if I sell it, it actually pushes up my average price. If it doesn't make sense, leave a comment below. I'm happy to explain it in a longer video, how the math part of it works. And I'll show using PowerPoint and all that. So that's what happened. And last night, what happened was they put out an announcement and say the company is going to be acquired by a US company that specializes in uranium and rare earth. Partly probably because Trump encouraged US company to go out to the world to secure all of these resources so that it can secure US supply of rare earth. So I kind of knew that the fair price of the company should be around $1.60. And immediately the share price went up to $1.60, which is what I deem as the fair price, even though I personally think it could go up to 2 Aussie dollar. So it went from 75 cents Aussie dollar to $1.60 Aussie dollar within one single night. And that's how I made 120% in one single day from that share. But granted, on the overall bigger scheme of things, I only made about 33% from these shares. Not bad for a share that I bought only a little bit more than 3 months ago. So you can see I did lose money at one point with this particular share, but I was quite confident that it will go up because I have done my analysis of the geopolitics and the actual value and what's the strength of this particular company and how is it different from all the rest of the rare earth companies in Australia and around the world. Not a buy and sell recommendation. In fact, I plan to post this video on the 22nd of January. By that time, the share price probably would have reflect the fair price already, and there isn't a lot of upside for you. So certainly not a recommendation. But I'm sharing this really as a personal experience of how I manage my own investment and how I assess risk and how I go about studying any particular shares that I would like to buy. This is just one way of analyzing the shares. You can also see that I'm not a very bottoms up person. I don't talk about the financial report of the company, although I could analyze the financial report if I want to. I mean, I am trained as an auditor, although I hated my job when I was working as an auditor. So I don't incline to go there. I'm more interested in analyzing the macroeconomy, the geopolitics, and the overall strategy of the industry and the company and decide what to invest in from there. I hope this video would encourage you to start thinking about investing, start learning how to invest. And I would say uh, if you haven't been investing at all and you would like to start investing, the best thing for you to do is probably just to buy an ETF. Like ETF is exchange traded funds. I always say ETF are like fruit baskets. You can imagine like a fruit basket full of the largest 500 fruits in the US, as I call it. You know, S&P 500 basically means Standard and Poor 500, and these are the largest 500 companies in the US. And it includes companies like Microsoft, Apple, Google, Facebook, Tesla, Nvidia, Micron, and so on. And you don't have to make decision on what individual shares to buy, because hopefully you can see from my analysis that to analyze what individual shares to buy actually takes a lot of time. And I can come up with the analysis because I've been investing for the past 20 years. And trust me, I have paid my fair share of school fees. I have lost money in Forex. I've lost money in shares in general. And even with the share that I made money from yesterday, at one point, I lost at one point I lost more than £5,000 in this one single shares, and this is a paper loss, but that's just from one single share alone. So it is risky, but it has its reward if you learn how to invest, and most importantly, how to manage your own emotions when it comes to investing. And always think about risk. You know, for me, you can probably hear that I was trying to understand what is the risk involved, right? If I invest £10,000 into this one particular share, the worst case scenario is I lose all £10,000. And am I mentally prepared to do that? Like, can I take that loss with the hope that it will give me a tremendous return? So in this case, it has worked out really well. And I have shares that didn't quite work out very well. I mean, touch wood, thank goodness, I never have any shares that bankrupt. So I never really suffer total loss. I mean, I have suffered more than a few £1,000s worth of loss in one single shares before. So it is risky, but on days like this, I am quite happy with my results. And I just want to share it with you, hopefully to encourage you to start thinking about investing and building wealth for yourself. If you find this video useful, click a like and a subscribe. And if there's anything you don't know in this video, if I'm using too many jargons because I've been investing for so long, and sometimes these jargons are just words to me. If I'm using too many jargons that you don't understand, please leave a comment below. I would love to explain it to you so that I can make investing less confusing for you. Okay, please click a like and a subscribe. And most importantly, if you find this video useful and there are friends around you who are curious about investing and would like to start learning how to invest, please share this video with them so that they can subscribe to my channel and learn more about how you can start investing. Okay, see you soon. Bye.